The gender gap that gets the most attention is the wage gap, but there's another disparity, one in investing, that's brewing between men and women, and it's really impacting women's financial futures. Here to talk with us today is Jennifer Barrett, the editor-in-chief of ACORNS Grow magazine. Thanks so much for joining us today.
Thanks for having me.
Okay, so tell me about this gap in investing. It's not really one that we think of when we think of a gender gap.
No, we talk a lot about the gender wage gap, and really the gap that's more significant is the gender wealth gap, and specifically the gender investing gap. So women, we know, invest later and less than men. And in truth, we need to be investing earlier and more than men because we outlive them, and we also know that we earn earn less than men on average.
And there are some other factors that go into the cumulative earnings gap over the course of time too, right? You're talking about taking care of an aging spouse or parent, raising a kid. So by the end, the Merrill Lynch study that we saw says that there's an over $1 million earnings gap by the time women hit retirement compared to men. That's an enormous gap. I mean, are most women even aware that the gap is that big?
I don't think so. And it's really the cumulative effect. So there are a couple things going on here. One is that we're getting paid less, and there are a number of factors that influence that. You mentioned one where you can step out of the workforce, maybe to care for somebody, care for a baby, care for a loved one. The other thing is that we know on average we're earning less than men, and there are multiple factors there. We choose lower paying careers sometimes, even in the same field, but we also tend to negotiate lower salaries. So there are a number of variables, but the cumulative effect is really tremendous. And what's interesting to me is that the same forces are at work with investing. So if women would invest earlier and a little bit more, they would see that same kind of compounding effect with their investments. So it can work in your favor as well. And it's that much more important because, as you point out, we are starting a little further back in terms of the money that we earn.
And, I was talking to Elvest CEO Sally Krawcheck about this, and, we were talking about just the disparity in the way that Wall Street appeals to women, too, in terms of, financial advisors and the way that, these services are marketed toward them. I mean, what do you make of that?
Well, I mean, we know that Wall Street has historically been dominated by older white males. And there's a lot of research out there to show that they tend to speak to men more than women. So even when you have couples who go in to work with an advisor, a lot of women have said that the advisor is speaking mostly to the man. And so you see there's a stat that's out there about the number of widows who fire the advisor after their husband dies because, and in part, I think because they feel like they weren't being spoken to and they weren't being heard. And so this is something that's already out there and Wall Street is aware of. And I think that they've made great strides in trying to really reach women and talk to women, understand that women's needs are there. Obviously there are a lot that are similar to men. We both want to build wealth. We both, have a lot of the same expenses, but our needs are a little bit different because we live longer, because still we earn a little bit less, and because we tend to be the ones who step out of the workforce to take care of loved ones. And increasingly, women are often the breadwinners, so supporting a family too. So there are a lot of different considerations there that I'm not sure are really being covered when we think of how Wall Street is speaking to women.
Right. And then a little component that we talked about in our last chat is the whole cultural messaging element to it. And, you were saying that women are more likely encouraged, I suppose, in a broader cultural sense, to spend their money rather than invest it.
Yes. I mean, that's the message that we get, right? I mean, we look at the research in terms of what parents are teaching their children. And there's a lot of research out there that shows both the messages and the lessons that parents are teaching their boys and their girls are different. So we see that parents teach their boys how to invest, and they teach them how to build credit. And parents teach their girls, I should say, how to spend smartly, how to budget. And so the messages are a little bit different. So you see that reflected then in surveys of preteens, teens, young adults, and that women and preteen and teenage girls say they're relatively confident shopping and getting a good deal, but they are not as confident when it comes to investing. They are not as confident when it comes to managing their money. And they're not as confident when it comes to building their credit. All of these things are so important in terms of building wealth and being financially successful as an adult. And, we're just not getting those lessons at home. And we know we're not getting those lessons at school because most people just don't get a formal financial education, whether you're male or female.
Mm-hmm. And so from here then, I mean, in addition to building that confidence, what else can women do from here if they've never invested before, if maybe they're only contributing to their 401k at work but don't really know where else to begin? I mean, where do you get started?
I mean, the most important thing, of course, is to get started. So a lot of times there's this idea that you have to have a certain amount of wealth before you start investing outside of a 401k, or there's an idea that, wow, I'm living paycheck to paycheck. I don't have any money to save or invest. And I think it's just important to set aside just a little bit of money and get started, no matter what your situation is, because the most important factor you have on your side is time, because your money will compound over time. So just getting started and getting into a regular habit of investing is one of the most important things you can do.
Okay. And I understand you're working on a book on this topic, right? On that wealth gap?
I am. Yes.
All right.
Yes, it's been, and I'm happy to talk more about it as I continue to do my research, but it's been really enlightening to look at all the factors that are in play here. It's such an important topic.
And I mean, as you've been speaking to women for your book, I mean, are there any anecdotes or any stories that have really popped out for you so far?
Well, I'll share one that kind of speaks to what we were talking about earlier in terms of the messages that we get. One woman I spoke to who's a single mom told me, and by choice, had told me that when she was younger, for her bat mitzvah, she got jewelry. And for her brother's bar mitzvah, they taught him how to invest, and they started investing in the stock market with him. And those messages were so different. And of course, her parents never imagined that she would then be a single mom, raising a family on her own, when they gave her the jewelry. And to think now, if they had taught her how to invest and she'd started investing early on, how much of a difference that would make, especially now that she is financially responsible for herself and her family. So she thinks about that a lot. And I thought that was really kind of indicative of the messages we get, jewelry to adorn you and make you attractive to a potential mate versus teaching a girl or woman the skills to invest so that she's able to support herself and provide herself with the life that she wants. I mean, it's so stark. And I think we're making a lot of progress there, but we're not quite there yet.
Well, thanks so much for joining us today, Jennifer. It was really a pleasure having you on. Thanks so much.
Thanks so much for having me.